When it comes to investing, guys, I want to talk to you about something that was part of the budget that came out just recently, and then we can get into fun stuff. But the boring stuff, the yucky stuff, is capital gains tax. It was one of the major headlines for the last week or so, and I just want to tell you some basic numbers around this. I'm not going to go deep into calculations, but let me tell you what happened in the last little while. So the capital gains tax inclusion rate is 50%. So this is as of now. Now, what a lot of people think is that means that 50% of my profit disappears. That is not correct. Here's how this works. It does not mean that you lose 50% of your profit. It means that 50% of your gain is taxable. Half your gain is taxable. Reverse, it means that half your gain is tax-free. So put simply, if you make 100 grand, 50 grand comes to you tax-free. The other 50 grand gets taxed at your income tax rate. Let's just say you're in that higher rate. You'll pay 54% on that 50 grand. It's certainly not half your gain. In most cases, it's about a quarter of your gain. Now that we understand that, what happened is that they've increased the inclusion rate from 50% to 66.7% on gains above 250 grand. So the first 250 grand is going to be treated exactly the same as it always has been, but the amount above 250 grand gain is treated differently. So the first 250, not affected. Anything over 250 is taxed slightly higher.